What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 9th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we have a lot of exciting things to dive into. We're not only going to be talking about the 3 key levels that I'm looking for Bitcoin to pass in order to confirm that we've had a breakout and are going to start retesting back up to 20,000, but along with that as well, we've seen a lot of excessive risk-taking and optimism across the board in different markets, not only in the cryptocurrency space as DeFi plays start to really take the center stage, but also in the broader multi-trillion-dollar equity market as we've started to see a wide range of sectors enter into double-digit returns. Some stocks going up as much as 25, 50, even 70 to 100% overnight. So again, this is a really interesting phenomenon. I want to spend some time to talk about it, as well as the industries that are currently interesting me. So we've got a lot of things to discuss. Let's just go ahead and dive right into it, guys. Taking a look across the board here for cryptocurrencies, we can see the vast majority of cryptocurrencies still in a no trend scenario at the moment, as Bitcoin again is continuing to push sideways. We'll discuss a little bit about what we're looking for in the sense of Bitcoin here. But again, in the short term, AAVE as well as Kyber Network and Loopring are doing really well. Swissborg leading the way, another good cryptocurrency wallet in the space, or a cryptocurrency app in the space. But again, for more of the focus here for the broader performance, we see AAVE, Kyber Network, and Loopring performing really well in upper double-digit territory here. And again, AAVE and Kyber Network being some of the big DeFi plays, and Loopring possibly looking at being one of the major scaling solutions in the cryptocurrency space as well to scale out the Ethereum network. So again, keep an eye on these 3. We've talked about them all in the past. I want to go ahead. We'll dive into these altcoin plays in just a moment. I want to talk a little bit about Bitcoin itself. I know many people are curious about what I might be, or maybe many of you might be. I don't want to say that you guys are curious about it. You might not care about my opinion, but if you're here, I'm assuming that maybe some of you might be curious about what I'm looking for Bitcoin. So there's 3 different uptrend lines here that I basically draw on the chart that show kind of varying degrees of where someone would, for example, draw the line of resistance from the peak back here in 2017 all the way to where we're currently at, considering this previous lower high here. And right now, through some of these lines, we've moved through the first one here, and we're very, very close to passing the second line here. That would kind of take more of a moderate approach rather than a conservative or overtly optimistic actually, I would say probably I would label this as conservative. This would be more of an optimistic one because it's easier to surpass this line versus this line. So right now we're really trying to test more of a moderate channel here. And if we can get above this and have a close on the weekly, I think that we've got a very good chance of coming up here, setting a higher low, what we set back here, and really starting to get back above the previous higher low over here back from July. So again, these lines are good little things we can use here on the logarithmic chart. And again, stepping back again, with time frames, guys, always remind yourself the key thing here that you should take away from this chart is that we have expanding cycles. Our estimate is that the peak is going to be in November of 2022. Okay, I'm going to say that multiple times. It's a wide time frame here. I think it's not only going to, it's a very conservative estimate in this case, so I feel confident in saying that. But along with that, it's just going off of history here from the last 3 cycles. Each cycle adds 11 to 13 months, right? So we're going to go here and assume that it's going to be about 205 weeks, or if you want to take it on the monthly, to keep things simple, right? That's going to be a total of 47 monthly candles. So we'll see what happens. Now, wanted to talk a little bit about the kind of excessive, crazy change here that I think no one's talking about, and that is the growth in Tether over the last couple of months since January. January 1st, we had around a $4 billion market cap for Tether. We now are sitting at $9.2 billion, more than double in a matter of 6 months, on an already very large market cap for Tether as a stablecoin. The relevancy of Tether is stronger now more than ever when it comes to trading cryptocurrencies, when it comes to payments, when it comes to transferring wealth. Tether has really stolen the center stage here. So it's really interesting to see how Tether's been expanding so quickly. Again, I'm really curious about the auditing practice, but at the end of the day, people don't really care if it's backed by anything. I think that's become obviously clear, guys. With the time that Tether's been around and the rate that they're issuing Tether, I don't think people really care. So long as it holds that dollar peg, that's the utility for people, right? Anyways, wanted to go ahead and dive into this broader topic here. Well, actually, first off, want to start talking about the kind of risk-on factor here in cryptocurrency markets. Lend BTC, this is AAVE, coming through with a consistent multi-week green uptrend here. Now, volume, this is the one thing that's got me a bit disappointed. And of course, you have to consider that there are other exchanges. The problem for me, though, is that even though, of course, as values go higher, it's tended sometimes to understand that because you're paying a higher amount of Satoshis or higher rate for Bitcoin for, or generally even USD price and stuff for the cryptocurrency itself, we've been seeing a diminishment here. But I will say as well, again, you have to look at other pairs. So for example, we have the Tether pair, right? Which just got listed here. That's going to probably start to suck off some of this wealth or some of this volume here from the Binance or BTC pair on Binance. But again, just going back, comparing it to Bitcoin, right? We're always here to check how we're performing against the other cryptos. And I apologize, I misspoke. It's a monthly performance here. So starting back here since September, when we, for example, went long on plays like Kyber Network, we've seen AAVE and other DeFi plays multiply time and time again over and over on its valuation. So again, this looks like a very clear chart here, guys. Again, to continue onward and really continue this exponential cycle. I currently don't own any AAVE. I just wanted to share this with you guys. I think it's one that's important to watch. Outside of that as well, one that we have been watching and has been performing well is Kyber Network. Right? So Kyber Network here, without trying to get the chart to be too confusing, I'll go ahead and kind of show you the general drawings we have here, guys. So this is something we published for the newsletter back a couple of weeks ago. And again, this is the kind of stuff we kind of dive into in depth in regards to altcoins. And I try to share that general knowledge with you guys as well and stuff. I'm not really one for keeping things exclusive or anything. I've already talked about Kyber plenty of times, right? One of the things, though, that I did is a really deep dive on the kind of TA of what's playing out now, because I think something quite significant is happening. That's why Kyber Network has performed quite nicely over the last 48 hours. So first off, you have to take a look at the lines of resistance here on the logarithmic chart, right? We had not only the breakout down here, the ascending triangle, which again, we went long back here in September around like 2,100, 2,200 Satoshis. So back here in September, and we're now up towards around 9,000 Satoshis. And again, you have this breakout here. You have support here around the general range of support from back here in October 2018 and also back here in December 2017. And we've been going up and pressing against this line of resistance. And again, just like how for Bitcoin, we want to see that break after multiple retests above that line of resistance, we have now actually gotten that break. And it's, again, a matter of just actually holding these gains here for the next few days or possibly even climbing higher, right? Now, again, I've had this line drawn on here for quite some time about how we bounced around and eventually break out. And it seems like we're playing on that even a little bit earlier than generally where I drew it. So again, it's good to see a break above this long-term line of resistance. The significance of this, I mean, if you've already seen with AAVE, this kind of huge U-shape recovery that's happened over a multitude of years, that's what we're seeing here, right? So it's a matter of getting some more volume and follow through here. But in the sense of price, things are looking great. And this is why we've been really long these plays here, guys. I've been long a lot of DeFi plays for the last, nearly over half a year to a year. I've been talking about plays like Kyber Network since back here in September of 2017 when they were doing their ICO. It's an awesome project, and there's a lot of great companies that are still killing it. But again, just wanted to share with you guys. Now, talking about the broader topic here, I want to go ahead and talk about the craziness in equity markets. If you guys haven't been keeping up with it, we did get the V-shaped recovery in equities. We haven't gotten into the real world economy, but again, fundamentals don't matter when it comes to equity markets, guys, because when you're printing excessive amounts of money, when you have peak amounts of retail traders, everyday people, going through, buying up stocks and pushing the order book higher, that's when you get these kind of rallies. And we've just broken out, not yesterday, but at the end of last week, we broke out to new all-time highs on the Nasdaq. 40 million people unemployed. With all that's been going on, I don't think you guys need me to tell you everything that's been going on and stuff. It's really starting to, if you want to view it on a fundamental basis, it's pricing in the next 3 to 5 years of optimism. But this makes sense, though. Obviously, I know we can sit here and say it's crazy, but you literally have to just kind of you almost have to just kind of go with it, right? Because there's no arguing this. There's massive amounts of Fed liquidity, right? And the Fed, even though they're looking to start to maybe tamper a little bit of the excessive degrees of liquidity that they're injecting in, no doubt, the Fed has obviously shown that they're not going to let this fail, right? So in this case, until you start hearing the Fed talk negative, the punch bowl is full, the party's going, right? And this is the key thing I want to talk about here. Whereas large caps like Google, Facebook, Apple, Amazon, all these companies have been the leaders in the market. An interesting trend has started to form for the first time, right? So the first time here since back here in 1999, we're actually seeing small caps start to gain at a significant pace against large caps. This is the ratio between the RUI and RUT, the Russell 1000 divided by the Russell 2000. So you could do this in an opposite nature as well. So if you did RUT or RUI as a ratio, what you'd see here is that as this starts to go up, small caps are outperforming. And for the first time at a very significant level back here, what we saw back in the 90s, we've now seen small caps starting to bolster serious returns and starting to cancel out on a multitude of weeks where small caps got really burnt back here in March. And large caps, of course, were kind of the safe haven. And now we can start to see, again, if you take a look at the stock screeners like FinViz, I mean, you see a very clear trend here that there's a few key sectors that are really gaining, but I mean, you can go through multiple pages here, guys. We jump from the first page to the third page, and you still have companies in near 40 to 50% territory. Going on to the fifth page here, it's like you're dropping down like 10 percentage points and stuff across these, but I mean, the significance of this, guys, as you go through this and see these kind of returns, there is no way of truly justifying how absurd and crazy this is. Now, what are the industries that are recovering, and which ones should we be watching in this case? So again, with especially stocks, guys, just like crypto, I'm not your financial advisor. I can't tell you what to do. All I'm doing here today is just sharing with you all what I'm personally watching. Now, the only equity position I have right now, and we've talked about this on the newsletter, is Tilray, which is a cannabis company. I've been trading on it. Of course, I don't really like the fundamentals of the company. I think it's way overvalued, just like all cannabis companies. But you know what? I don't care. I really don't care because fundamentals do not matter in this market. You follow trend. So that's one of the first things we're going to talk about. Cannabis here. Cannabis had a massive breakout, one of the best days it's had over the last few months here, since back here in March. But cannabis has been on a tear of higher lows and higher highs ever since back here in March. It's been one of the best sectors to recover. We had a breakout in volume here on MJ, one of the major ETFs for cannabis, up 8.76%. And again, taking a look at Tilray, one of our plays, it wasn't even the best performing yesterday, to be fair. Hexo, Kronos, OGI, Aurora Cannabis, all these plays did better, to be fair. But for us, this has been a really great play. Now, we've not only traded this a little bit, we did one or two trades. I think there was I first bought Tilray back here and stuff. I have to go back and look at my trades. But the current one that I've been in and stuff outside of actually selling portion of the news here, buying it at a dip, if you just generally held since when we first went into it on the newsletter back in May, you'd be up 40% here in this case. So again, Tilray's been a great play. I'm glad I continued to kind of hold on to this trend because as much as you'd be buying at a premium from down here at $2.50, the trend was strong. This was the first time that on a significant basis you could see Tilray start to actually set an actual consistent trend because every time Tilray and other cannabis stocks got a 2 or 3 week breakout, it would always be sold off. There was no follow through. And the volume down here was extremely significant. So again, taking a look at the logarithmic chart, it becomes very clear that the trend is starting to reverse. And our target for this is well into the upper, $17, $18 range to the low $20 range. At least in the short term. Could go higher than that, but that's generally what I'm holding out for here for Tilray. In the sense of other industries, though, that I'm watching for, energy. Energy has been coming in like wildfire here. Now, I personally am not actually planning to go long energy. I know on this chart here, if you were to take a look at this, guys, I think, energy has not only had a great rebound, but it's also far away from its highs here. So are you going long on it, Nick? No, I'm not. I think that as much as it's phenomenal to see the energy sector getting a bit of a rebound here, I don't want the energy sector to die out, especially in the U.S. I want energy independence in the States. At the same time, I think that the rally that we've seen is a little bit abhorrent. I don't think that oil prices are going to hold where they're at, and I really don't think, again, we've seen a significant enough rebound in this case for natural gas to be confident on all these energy companies coming back. Right? I just generally don't feel that. So what I'm doing here in the sense for, the broader energy sector, I'm looking possibly, I might consider doing a short position once we get back towards this long-term line of support. that we've seen that's been building up over these years. Once we get up towards like the the $50 range and stuff for the ETF here for XLE, I'm going to be looking at possibly some overbought opportunities for stocks and possibly taking some kind of short position or maybe getting puts or something like that. I don't dabble in options very often, but I would definitely consider it in that case. Outside of that as well, in the sense of like positive things that I think are going to do well in regards to energy, I would definitely keep an eye on not only innovative sectors like solar, or even, for example, the oversold sectors like uranium, but also take a look at EV plays outside of Tesla. I love Tesla as a company, but again, bearing in mind that Tesla's pretty overextended right now in the sense of its value, take a look at plays here like NEO, right? Just check it out. Check out a few different plays in the market, electric vehicle plays. I know there's like Nikola Corp, which was the one that's recently just blown up. And maybe that could be one to continue watching. It's only, I think, a $2 billion market cap. This is one of the bigger EV plays in China, NEO. We talked about this back in December 2018. Again, this is around a little bit above $2, and now it's up nearly at $6, right? So again, setting higher lows and higher highs consecutively here, and was building a channel over these last few months since back here in June. But I think that this has a good chance here of having an IPO reversal, coming back up, testing up to new highs and breaking out. Valuation gives room for it. 4.6 billion. Again, fundamentals not very sound, but again, do never doubt, guys, that things will break away from the fundamentals, that liquidity, when it is in excessive levels, valuations can climb to ridiculous levels. It's just a matter of making sure that you have a plan to get out of your position when things turn south, right? Third thing here, biotech. If you take a look across the board at the broader industry for biotech, we've not only broken out to new all-time highs here from a previous high back here in July of 2015, but also here in the short term, we're building in wedges here on both XBI and IBB, which are broad measurements of performance of biotech companies in the Nasdaq and also in the S&P 500. So again, when you take a look at this, there is a lot of opportunities for biotech stocks to easily, go into double-digit territory or triple-digit territory, over a couple of days, a couple of weeks. But I'm not here to really push specific companies. Again, as I mentioned before, guys, I'm not here to really tell you guys what's going to be the next biotech company. Biotech stocks are very risky if you go on an individual basis. As a broad industry, they perform quite well here. They've gone up more than 40% here since the bottom back here in March. So what's one of the ways you can get some exposure to this industry and a more diversified approach? Well, one of the things that I'm currently watching, and again, you'd have to assume if it's something you guys would want to do, is the ARK ETF. So ARK is one of the biggest investment companies out there that's been investing in a lot of trending industries. They're very popular. They get interviewed a lot for their investments in companies like Tesla. But what I really like here about ARK's ETF is that, in this case here, it's called the ARK ETF, Genomic Revolution ETF. So this is going to give you exposure to a lot of high-end biotech companies. Again, we've got a nice pullback here over the last few weeks, and I'm looking for this to probably continue a little bit towards a more moderate level here in the mid $40 range or lower $40 range. But as this starts to trend back upwards, on the daily, once we start to get this looking a little bit more optimistic and fading off some of these kind of crazy gains we've had, where we've more than doubled since back here in March. After that, I'll look to possibly go long on the ETF in this case. This will be one of my more safer plays I'm looking at. But who knows? These are just some examples, guys, right? Again, you have to determine out there's thousands and thousands of different stocks out there. The broader narrative, though, is that as excessive amounts of new retail traders come to the market, an excessive amount of new liquidity from the Fed comes in, people are starting to realize that markets are going to be holding out for quite some time. And I think that, going back to the Nasdaq, right, just taking a step back, we really need to go to new exponential highs here over the next few months before we really start to see a pullback. I would say, right, just taking a look at the actual Nasdaq value, right, we're taking a look at the triple Q, right, we're about to break 10,000 here for the Nasdaq. Again, very important to keep in mind here. See what happens here when we get to double of the previous highs of the dot-com bubble. That's going to be very important to keep in mind. If we break right through it, right, it clears through 10,000 very easily, then the sky's the limit, right? Things are going to go haywire and crazy, right? We're going to go practically vertical. But in the sense of 10,000, if we do get a little bit of resistance there, again, always have your exit strategy with these different plays, guys, and different, investments across the board. Doesn't matter what market you're trading. Always make sure you're prepared for things to go south. And whether that's setting up a stop whether that's diversifying your portfolio, not putting all your eggs in one basket. You have to determine that for yourself. It depends on the kind of strategy and risk profile you want to take. All right. So anyways, hope you all are doing well wherever you are, guys. Thank you all so much for watching this video. I'll see you all in the next video. Stay tuned.